Did you know that 82% of small businesses that fail do so because of cash flow problems? And to take it a one step further, about half of vacational managers cite financial management, including trust accounting, as one of their biggest operational challenges. Welcome, everybody. I'm Heidi Hendrickson, the facilitator for today's webinar, Your Financial Fitness Checkup. As the Executive Director of VRNation, I'm thrilled to introduce our host, Dina Williams, a VRM advocate, and our couple of special guests. We've got Michael Friedman of the Simple Life Hospitality and Sean Lynn of Love Leavenworth. So for those of you new to VRNation, a quick overview. We are a thriving community of vacation rental professionals. We're dedicated to elevating the short-term rental industry with education, resources, and support for hosts of all sizes. So without further ado, our schedule today is a 30-minute webinar with room for Q&A towards the end. We'll have some resources also. And with that, I'd like to hand things over to Dina to run the show. Welcome, Dina.
Thank you so much, Heidi. I appreciate it. And thank you for having us. Really excited to work with VRNation. I also want to thank Michael and Sean for joining me with their real life property management experience and how these tools that we share with you today have affected them and their business. So thank you both for joining me today. All right, to jump in, why financial fitness matters. And so we're going to discuss today ways to enable you to create processes that allow you to use your financial reports as a tool to grow your business. With financial help, you will be better equipped to make sound decisions that affect your bottom line. And so when we're thinking about this, we're looking at, are our financial statements accurate? Do they take too much time? Like, why is it that accounting is so time consuming? And are we able to use them to find opportunity for growth? And so that's what we're really going to focus and give you those tools that you need for the end of the year. So setting the stage for financial success, we want to look specifically today at reconciliations. I know nobody will be surprised to hear an accountant tell you that reconciliations are important, but I'll get into the why behind that. And then, those financial statements and how we can use them. So the data within them and how we're going to be able to use them for a clear picture of your financial health. All right, so reconciliations. To start, we want to make sure that all of your credit cards and bank accounts in both your operating and trust accounting platforms are completely reconciled. So if you're looking at having a financially fit 2025, then let's go ahead and make sure that everything is reconciled in 2024. When you're reconciling, you're not only just saying, yes, everything is cleared, my bank matches my reconciliation. You're also wanting to make sure that you're looking at the things that don't clear. So you want to properly record things that transactions that have hit your bank account and aren't in your aren't in your accounting platforms yet, both operating and trust accounting. But you're also looking at the things that don't clear. Why don't they clear? So in an operating accounting platform such as QuickBooks, it is common to find duplicates. And so if you're not paying any attention to the uncleared transactions, then there could be duplicates that are affecting your financial statements. That accuracy is super important. And so really good idea before you are excited you get to zero and finish a reconciliation. You want to make sure that you're looking at the things that don't clear. Another example of things that don't clear in a trust account I have found where you have payments from guests that haven't cleared the bank. I immediately want to know why. I don't want to do a reconciliation in 3 months from now and find that. I want to find it as soon as possible. So I'm reconciling that trust account every week. Because if you're not receiving deposits or payments from your merchant or from an OTA, I want to know why right away so you could get that rectified. Michael and Sean, I wonder if you guys have any reconciliation stories that you want to share on how they affected your business.
Yeah, I mean, I'll jump in. This is Michael with Simple Life. So well, first of all, I wanted to say we didn't really reconcile. Well, let me rephrase that. We reconciled, but we didn't do it in a really good way over the last, say, year and a half before we started working with Dina and her team. And I think one of the things we found is that there were so many discrepancies, as Dina shared, in our accounting practices. And it was just really eye-opening to see where we thought we were making money, but in actuality, we actually were either just breaking even or losing money. And that's not to say that our team didn't do a good job. It's just say that we just didn't have the solid accounting practices we really needed when we look at reconciling certain things, and especially for us on the cleaning side of things. We realized that we thought we were making the margin we needed to make. But in actuality, it just shed light on so much that we really needed to raise our cleaning margin by $25 a clean. And so I think the biggest thing I can say is that, for us, it was just really eye-opening to reconcile in a way that now gives us this incredible peace of mind, knowing, and I'm going to say this, where every single penny is going in the company. And I can't stress that enough because it really, really matters. I mean, it really matters to know exactly where those dollars are going.
Yeah, great comments, Michael. I kind of want to echo what you said, but also on top of that, as the owner of Love Leavenworth, we started the company from the ground up. So we ran our own accounting in the early stages. And for those of you that are on the call that are smaller and don't have bookkeepers or accountants that are looking at this regularly, this is such a critical component to look at right here to make sure that at the very least your bank accounts are reconciled on a monthly basis. You can go wrong very quickly
Mhm.
without oversight. For those that are larger that have bookkeepers and accountants, it's important to have oversight on that and make sure that your accountants are questioning if there's a transaction that they're not quite sure of, or where it should go, or what category it goes in, that you have a great relationship with those bookkeepers and those accountants so that you are accurately recording all of these items, like Dina was just saying, and can get properly reconciled across the board at the end of every year.
Thank you. Yeah, and that also made me think of a couple other additional points here. With, like QuickBooks or Sage, they use so much great automation now that does save time where you can connect your bank account and you're getting all of your transactions coming in. However, they're efficient because of memory. And so if you miscategorize or if something gets accidentally miscategorized the first time or the second time, the system is going to miscategorize that vendor or that deposit every time forward. And so, just making sure you're reviewing those things as you're reconciling is really important to catch those inaccurate categorizations. You also, just as a rule of thumb, any deposits or ACH expenses should clear your bank within 1 to 2 days. If there's checks, then those should clear within 90. And so when I'm talking uncleared transactions before you complete your reconciliation, any deposits or ACH withdrawals that are more than 2 days old, I'm looking at, and any checks more than 90 days old, I want to look at. All right, so analyzing your financial statements. As a property manager, you should review your balance sheet and your profit and loss at least once a month. As you're looking over each report, you want to make sure that the balances accurately reflect what happened in your company. As I mentioned, it's common for those transactions to be miscategorized, and so you can catch that as you're reviewing those statements and get those fixed if you didn't see it in the reconciliation process. So you're looking through making sure everything's categorized correctly, making sure the balances accurately reflect what happened in your business. And then you're also wanting to look at, does your income section of your profit and loss, so you're operating in your operating system, when you're looking at your profit and loss for your company, does the income section of the profit and loss accurately report your income? Do your management commissions, all of your ancillary fees on your profit and loss align with your property management software, how you have that set up? So you want to make sure those two align so that you can easily report how you've earned your income. The next step would be improving your financial statements to ensure your expenses related to those ancillary fees are listed as a cost of goods sold. This will allow you to easily see how much you've earned in cleaning, as an example, compared to how much you've spent on your cleaning expenses. And so you'll know what your cleaning margin is. Michael or Sean, do either one of you have any points for reviewing your financial statements each month, or what you look at specifically?
Yeah, I'll jump in. As you know, Dina, we recently went through a transition, as far as our accounting practices toward the end of 2024, and it was incredibly eye-opening. I've been in this industry for a long, long time, and my focus has always been, whether it's been on the vendor side or the property management side, that we're in a business to make a profit. And I think the one thing I've seen and found, and this isn't true for everyone, that this kind of just gets tucked away to the side, that, yeah, we're making money, or we've had really great gross revenue this month, but we're really not diving in and seeing where things and monies are going. And I think for us, we really focus on now, having a great P&L put together, and looking at our income. Where's our revenue coming from? Are we tracking and forecasting properly for that income to reach the goals we need to reach? Looking at every single line item, believe it or not, from a cost of goods and sold perspective, to every single expense. And I think one of the things we found is that we saw expenses, that we really honestly, we're spending money on things that we just didn't need in the business anymore. And so I think that's just really a key point, that we all know that a profit and loss statement's important, but I would say, for those listening and watching and listen to this later, it is imperative that you have someone, whether it's on your team, or you hire someone to look at this every single month. I mean, now that we're doing it every month, I believe it or not, I look at it every week, because things are changing quickly in our business, and I'm looking at things every week to see, to make sure things are tracking properly for 2025 and in our future.
Yeah, great comments. Some of the real world scenarios that you're looking at is the profit and loss being accurate, and you being able to stay in touch with that on a regular basis, like Michael was just speaking to, can really help you make good, decisions into the future of whether to, buy that vehicle that maybe might help you within your business or not. These are all these kind of this kind of information really helps you make good decisions moving forward. The other thing that's a little tricky in our world is you have the trust accounting component of this as well. I don't know about most on the call, but myself have a trust accounting platform and QuickBooks platform, and those two have to align. And so you want to make sure that your P&Ls are clear within your QuickBooks, and that information is coming across from your trust accounting system to give you accurate information all the way through. So critical to have that type of information at your fingertips on a regular basis.
Great feedback. Okay, so I do have a couple examples here. We'll spend some time just kind of looking at these. On the left, we're looking at what's going on vacation rentals. And so in this particular instance, the property manager is putting all of their deposits into one of two income categories. And then their expenses are going into just three categories. And nothing really explains what's happening. We see that at the end there's a loss, but I can't really see why. I don't know why there's a loss. I don't know what's happening. I don't know what changes that I need to make. Anytime I see something that says other or miscellaneous, it's so vague that just doesn't make a whole lot of business sense. I can't make any business decisions on a miscellaneous category, whether it be income or expense at all. And so as we shift to the right, our making money vacation rentals, you can see their income section is divided into their management commission and then those ancillary fees we were talking about. So each month they're paying themselves out with their manager disbursement, and that is being broken out to how their income was earned from the reservations. So we could see the detail. It's all provided here on how they're earning their money from their property management software as they pay themselves. The second section is that cost of goods sold I was talking about. So each ancillary fee, or not each, but most of the time your ancillary fees will have some expense associated to that. And I want those expenses to be a cost of goods sold. So I want to be able to immediately see I have $30,000 in cleaning fee income, and then I have 18,500 in cleaning expenses, and there's a margin. Is the margin what I want it to be? I don't know. That would be a business decision that I need to think about and talk about as I grow. But there is a margin, and I'm happy that it's in the black. Processing fees. You can see here we have our processing fees that we've collected from guests on reservations is $30,000, and our merchant fees that we're paying out in order to be able to offer credit card payment options is $23,000. Still a margin. I'm charging enough on my processing fees to cover those merchant fees, and that's my goal. Owner reimbursable income, owner reimbursable expense, and markup income. Sometimes I see the owner reimbursable income and expense be a 1-for-1, and then the markup is where you could see the margin happening. Other times it looks sort of like you can see here where there's a little bit of a margin in the actual income section. But important that you could see that you're making a little bit of money on those owner reimbursable items. And then at the bottom, we have our expenses. I will say this entire making money vacation rentals P&L is very simplified, not realistic. The expenses would be much longer, but not too complicated. You do want to keep it very simple, and I'll get into that later also. But you could see here how now on making money vacation rentals, I know I am charging enough for processing fees, but maybe the cleaning fees, I need a little more margin, and I want to do something about that. Or in my management commission, you know, I only made $10,000, so that's not quite the margin that I want for the year. So maybe we're thinking about do we want an owner acquisition program? Do we need to raise our commission? How many years has it been since we've looked at our management commission, and is it time to adjust that? Are there other ancillary fees that need to be added? And so those are the types of things that you want to really look at when you have a clear picture of what is happening. So on the left, I don't have a clear picture. I'm not using my profit and loss as a tool to grow my business. And on the right, I absolutely am.
Dana, it's Michael. I just wanted to say one thing about this. We weren't operating blind, but we were operating with very foggy glasses, if you would. And I think we were operating in a way where we were that what's going on, and now we're obviously in making money. But you made a point that I think is really important, that for us too, we had a lot of different line items in cost of goods and expenses, and one of the things we did with your help and is we consolidated those because we had way too many just different line items that crossed kind of different paths and were very, very similar. And I would say, really consolidating that and keeping it as simple as possible is the key. And that's made our lives so much, much easier. So, I want to thank you for that. But just to the group watching, you made that point. You don't have to have every single thing be a line item. You can consolidate where need be.
Thanks, Michael.
Yeah. To echo that in real world, that the consolidating where need be is smart. I'm constantly doing that, including a major overhaul on our chart of accounts that Dean has been helping us with as well, both in trust accounting and QuickBooks accounting. It helps you paint that clear picture.
Mm-hmm.
All right, so some real life challenges and solutions. What we've discovered is that once a property management has set up their financial statements in this way, they're easily able to spot leakage or instances where the company is losing money. The top areas where I see loss are owner reimbursables and cleaning, which is why they were both just listed. So if you use updated financial statements, you're going to be able to easily identify those issues and rectify them immediately. So you can see, oh, I am not charging enough for cleaning, and I have to find some sort of solution right away. Can you be creative in your solutions? Yes. I over and over again hear stories about how we can't change our cleaning fees because the cleaners see it on their websites and they want to be paid one for one what we're charging, or the owners see it, or the guests are upset about how much cleaning is. If you're creative, you'll find a way to make a margin on cleaning. That is a service that you're providing and should be compensated for that service. For the owner reimbursable issue, there are really good, solid expense management solutions out there in this industry now. Solutions that allow for the credit card holders to they're instantly required to report their purchases. So what unit it's for, upload receipts, and then those, and a lot of instances do integrate with your property management software. So it goes directly to the owner statement once you've processed that or recorded it. And so there are solutions around expense management for the owner reimbursable loss, and just making sure that you're looking at that financial statement to see it and identify it right away. So having that process in place so that you're able to act on it sooner rather than later is going to affect your bottom line.
Dina, it's Michael. I'm just going to chime in if it's okay with you on this, on the especially on the expense management side of things. You know, we realize that billable hours and things that we should be charging our owners, you know, we're not being done properly, or not even being done at all. And I think, you know, now that we have an expense management tool that we use, it's just making our lives again so much easier, so much cleaner, so much clearer, as to, you know, knowing that we have a goal, you know, in our you know, weekly meeting that we have as a team. You know, we have billable hours as a track tool KPI that we have to look at, and we know where we need to be with that, you know, every single month. And so it's that piece of it has been just a huge, really a huge eye-opening experience for us to know now we can track everything and do it in a way that it does integrate with our software, and it's really simple to use. And I think that's another part of it is simplicity again, with especially with accounting things that the easier it is, the more likely we're going to use it.
For sure.
Yeah, quick, we're top key, love them, absolutely love them. And if you're considering expense management, it's a smart way to go. Not only does it stop some of that leakage, but it costs a lot of money to process that trust accounting piece, the QuickBooks accounting piece, all the reconciling. And I shopped many expense management systems. There's 3 or 4 anyway within the STR industry, and there's some really good ones out there, both upcoming and what's there. So these are it's a really good investment into your tech stack here with these expense management system if your company is big enough and it makes sense.
All right, so I do want to just throw some caution out there. As I mentioned when we were looking at the example of profit and losses, you want to keep this simple. So often people get really excited about this when they're ready to update their profit and loss, their income, their cost of goods sold, and they'll overcomplicate it a bit. And so, you know, if you create 4 different cleaning income accounts, you know, here's my owner cleans, here are my guest cleans, here's daily cleans, here's mid-stay cleans, and then you create 6 different cleaning cost of goods sold accounts. So you have, you know, my cleaning supplies, cleaning wages, contract cleaning. What happens is you end up spending too much time figuring out if you have a margin on your cleaning. So then you're going to spend time, you know, adding all of your cleaning income, subtracting all of the different cost of goods sold, and it's not clear. So try to make it very simple. You should be able to look at that profit and loss and in a couple minutes identify if there's an issue. It shouldn't take longer than that. And then the other part of this really, as you know, with your New Year's resolution for your financial fitness here, we want to make sure that you have this regular and consistent review happening. When you make it a habit, it's going to make a huge difference on the bottom line. All right, so just to bring it all together here, we want to set a New Year's resolution to ensure all of your reconciliations are complete. Your uncleared transactions are reviewed regularly. So making sure those financial statements are accurate before you review them is important. If the reconciliation isn't done, your financial statement probably isn't accurate. Review your property management financial statements monthly, at least. More often if that makes sense for you, but at least once a month is so important to do that. And then you're going to really look and zone in on your income compared to the cost of goods sold to identify if there's any areas that need further review and or adjustments. And then this will help you to a more financially fit 2025. We have some questions. I think that there are some questions. I can try to help.
There are, Dina. It's there's one from Gonzalo. He asked, would you start the P&L from rental income and include an expense item like rent due to owners, or would you start from property management commission down?
So really great question. And there's a lot of talk about this in the industry. I'm going to give you my recommendation. All of the deposits you receive for reservations coming in should go to a liability account, whether that's in your property management software or in your operating system. So if you don't have a trust accounting platform within your property management software and you're doing that in QuickBooks, it's still a liability. Those funds technically do not belong to your property management company, and so they would be a liability until the guest stays. And then they're going to be dispersed to owners, tax authorities, and of course, a portion to you as well. So in your income section, you would start with your management commissions. The rental income is just for your owners.
Great. I don't see any other questions at the moment. If there are other questions.
Yeah, feel free to chime into the chat. And then maybe in the meantime, Dina, we can just recap. I know the key takeaways, just summarize those few bullet points of everything you've covered today as a recap would be great.
Yeah, absolutely. So we're wanting to make sure that going into 2025, we have some really great goals to be financially fit and be able to use our financial statements, your property management operating financial statements as a tool to grow your business. So starting with those reconciliations, all credit cards too. So bank accounts and credit cards should be reconciled monthly. Sometimes those busy trust accounts, I'm going to recommend reconciling those every week. So you want to be on top of that. And so you're reconciling frequently and reviewing all of the transactions that don't clear in the reconciliation. Very, very important part of that. So are they duplicates? Are they things that should have cleared by now? Do we need to research where they are? So there could be lots of different scenarios on those uncleared transactions. Once you have all of your reconciliations done, then you're diving into your financial statements. You're looking at all of the balances on your balance sheet and your profit and loss, making sure that they make sense. That's going to also help you ensure that your transactions have been categorized correctly. If you see something that the balance is wonky, it's likely due to something not being categorized correctly. And so once you've done that, then you can really hone into your profit and loss and see where you have some opportunities for growth or making sure you're making a margin. Remember, all of those ancillary fees that you have on there are services you're providing, and so you should be compensated appropriately for those services too. I think we forget that sometimes and just think it's part of the business, and not necessarily true. So you are providing a service. You're coordinating the plumber to go to the owner's house. You're doing negotiations with merchant providers out there to make sure that you're getting a good rate on your merchant you're providing for this business. So those are services you're providing for your owners, for your guests. So you want to remember that always.
Looks like there was another question from Dana. It says, what do you recommend on paying vendors out of trust or operating?
Oh, another really great question. Depends on the vendor. All of your operating expenses, all of them should all be paid out of your operating account. So the ancillary vendors, like your cleaners, your contract cleaners, could be paid out of either. It really depends on what makes the most sense for you. What's the easiest, most simple way to do it? So it could be you pay your contract cleaners out of your trust account. I will remind you though, if you pay some of your vendors out of both, then when you do 1099s, you need to remember to combine the total that you've paid to them out of each system so that you're giving them one 1099 for the total that was paid.
Great. Looks like Gonzalo had another question. He said, we have a hard time assessing how much money is in our bank account. Is it money or how much of it is part of future obligations? I guess Trust Accounting Suite helps with that.
Ensuring that you're doing proper trust accounting will absolutely help with that. Whether that be within your property management software or within QuickBooks, it's very important to have clear trust accounting processes.
Great.
Dina, if I could ask a question here. How we're all so busy every day trying to make, ends meet and scrubbing toilets and doing the different things that we do to make it all happen. How do we find people to help us? What do we want to look for in an accountant, and what do we want to look for in a bookkeeper? And also, when is the time to do that? At what level of business do you start looking at those items? So if you could shed a little light on that, that would be great.
Yeah, absolutely. I'm going to start with the when. It typically is when you're not able to keep up with it and do it regularly. So you have this process in place. We just helped you create this great process, and you can't do those reconciliations monthly. You can't review the financial statements because you don't have time. Other things are more important. The accounting gets pushed to the side, then that's when you should find somebody else to do it. Or if you have no passion, let's just face, we all have our different, I don't want to be a salesperson. I'm not a salesperson, don't want to be. I love accounting. And so, we all have our own passions. And if you're doing the accounting and hate it, then that's the win. So there's a couple different answers there. There are several different solutions out there of companies that work with property management or short-term vacation rental entities and no trust accounting. And so what I really want to look for are bookkeepers or accountants that understand the platform I work with. And so usually if you're working with a property management software, they have people that they would recommend to you that specialize within their software. You can do a Google search. There's, of course, trust accounting professionals are out there. There's some on LinkedIn. I'm also happy to answer the question if people reach out to me and I'm not the right fit. I know, I have lots of connections, and I'm happy to help any way I can there too.
Great.
Looks like there was one more question from Gonzalo. What things can be outsourced and what others need to be in-house?
For accounting,
I
you can
believe I think that's what he's asking.
Yeah, there probably are some things in the property management realm that have to be done in-house. As far as accounting goes, everything can be outsourced. 100% of it. So at this point, I do want to thank you all for joining us, and thank you, Michael and Sean, for all of your valuable insight and feedback. It was fun to get together today and see everybody.
Yes, thank you so much for all the great info, Dina, Michael, and Sean. Always a pleasure to have you join us too. Thanks for your feedback and input. And thanks to everyone that joined us as well. We appreciate your attendance, and everyone have a great rest of your week.
Take care. Thank you.